Hello, everyone. We'll just wait for a moment for attendees to join. Okay, I think we can start now. Good afternoon, everybody. I hope you are having a good start to the week. Thank you for joining today for the webinar on setting up a business in Singapore from Vietnam. My name is Annabelle. I'm the event manager here at Lantern. For those who don't know about Lantern, we are a modern corporate and fund services firm based in Singapore. We help startups, SMEs, asset managers, and investors with their corporate and fund services so that they can focus on growing their business and portfolios. Today, we have invited Chantel, our head of corporate secretarial services at Lantern, to share some useful information around setting up a business in Singapore, what you need to consider and how to prepare for it. There will be a Q&A session after the presentation. If you have any questions or need any clarification, feel free to use the Q&A or chat function in your toolbar anytime during the webinar. Without further ado, I'll hand over to Chantel. Chantel, I think you're on mute.
Yeah, I think I'm muted myself. So yeah, hi everyone. And as mentioned, my name is Chantel and I head the CorpSec department here at Lantern. So today I'd just like to give everyone a quick webinar about setting up a business in Singapore. So as you can see on the slides, our agenda today will be covering the different type of corporate structures. Why is it and why should you choose Singapore as a place to set up your business? And also what do you need to know before setting up a business in Singapore? So there are four main types of corporate structures. So there's the sole proprietorship, partnerships, limited liability partnership, as well as a company. And then we'll also dive slightly into the new type of corporate structure, which is the variable capital company towards the end as well. So firstly, a sole proprietorship. So this is a business that is owned by one person. Legally, it's not considered a separate legal entity. So the owner has unlimited liability and the owner of the sole proprietorship can be sued in their own name as well, or as well in the business name. For statutory requirements, the sole proprietorship has to be renewed regularly, either every year or every 3 years. And at this moment, the company structure is only available to Singapore citizens, permanent residents, and entrepreneur holders. So if the owner is not resident in Singapore, then they must appoint an authorized representative who is a resident in Singapore. And finally, for taxes, the taxes are taxed at the owner's personal income tax rates. And also, if you are locally resident in Singapore, you also need to do CPF top-ups as well. So the next structure is partnerships. So partnerships is an association of 2 or more people, and there are 2 separate types. So regular partnerships as well as limited partnerships. So firstly, for regular partnerships, this is between 2 and 20 partners. And so if there's more than 20 partners, then they have to incorporate as a company. A partnership is not viewed as a separate legal entity. So the partners do have unlimited liability and they are personally liable for the debts and losses incurred by themselves as well as other partners as well. For statutory obligations, partnerships like sole proprietorships do have to be renewed either annually or every 3 years. And similar to sole proprietorships, this kind of structure is also only available to Singapore citizens, permanent residents, and entrepreneur holders as well. And if the owner is not resident in Singapore, then they must appoint an authorized representative who is resident in Singapore. And for taxes, it's also exactly the same. The profits are taxed at the partner's own personal income tax rates. And if you are a resident in Singapore, you will also have to make CPF contributions. So next, we'll go into limited partnerships as well as limited liability partnership. So I think you can see from the table that they are slightly similar, but yet there are differences between them. And the main difference is that a limited partnership is not considered a separate legal entity, whereas a limited liability partnership is. So for a limited partnership, and the general partner has unlimited liability, and the limited partner has limited liability. For the rest of the items, they are quite similar to partnerships as well as sole proprietorships, whereby there are yearly renewals. And this, in terms of who can set up a partnership, at least one general partner has to be resident in Singapore. And if not, then they must appoint a local manager who is locally resident in Singapore as well. And the profits are taxed at the partner's income tax rates, either individually or at the corporate income tax rate if they are like a corporate partner. So for limited liability partnerships, so I think these are more commonly set up by either law firms or accounting firms and audit firms as well. So as mentioned, this is considered a separate legal entity from its partners. However, if the partners did something wrong, so they have a wrongful action, they are still personally liable for debts and losses resulting from these actions, but they are not liable for debts and losses incurred by other partners. So for limited liability partnerships, every year the partnership has to declare a solvency or insolvency statement as well. And similar to limited partnership, they need to have at least one manager who is ordinarily resident in Singapore. And for taxes, and once again, similar to the previous types of structures, the profits are taxed at their partner's personal income tax rates if they're individuals, or corporate tax rates if it's a corporation. And so next, let's move on to the structure of a company, which is one that I would like to focus a little bit more on because I believe that's what most people here are interested in. So companies in Singapore is the most common business structure. As of the end of July, there are close to 400,000 businesses. Sorry, not businesses, but companies registered in Singapore. So that number is expected to grow as well. So a company is a separate legal entity and is made up of directors and shareholders. There are two main subtypes of companies, which is private companies or public companies. So the good thing about this limited liability is that the shareholders of the company have limited liability, so they cannot lose more than what they have already invested in the company. And the company can be sued in its own name. So the directors and the shareholders are generally not impacted. To set up a company, there are a few statutory requirements. So companies in Singapore do need to appoint a corporate secretary within 6 months of incorporation, and they need to appoint an auditor within 3 months as well. Aside from that, there are annual statutory filings with ACRA as well as IRAS, which we'll go into more detail later on. And so one other thing that you do need to take note for a company is that at least one director has to be ordinarily resident in Singapore. So this would be either a Singapore citizen, a permanent resident, an on-trip pass holder, and in certain cases, employment pass holders, once they have their employment passes, can act as director in a Singapore company as well. For corporate income tax, so the tax rates are quite attractive in Singapore at 17%. So the profits of the company are taxed, therefore, at this rate. And so the next one that I'd like to go into is this new company structure called a VCC. So VCC stands for Variable Capital Company, and this is a new corporate structure for investment funds that is under the VCC Act. So this structure was implemented around 2.5 years ago, so in January 2020, just before COVID-19 hit everyone. And so over the last few years, there's been around 80 VCCs that have been set up so far. And we expect to see more of these structures and since borders are opening up now. So VCCs are mainly for funds and they're required to be managed by a fund manager. The difference between a variable capital company and a company is that a VCC has flexibility in the issuance and redemptions of shares. So the traditional company structure only allows the company to pay dividends out of its capital. However, dividends out of profit. However, VCCs can pay dividends out of capital. So this gives the fund managers flexibility to meet any dividend payment obligations as and when required. Another thing is that a VCC can be set up as a single standalone fund or an umbrella fund with sub-funds. So each sub-fund will be holding a portfolio of segregated assets and liabilities. And for fund managers that structure their funds as umbrella VCCs, there can also be cost efficiencies as well. So finally, a few other points is that fund managers who have fund structures overseas, they can incorporate new VCCs in Singapore, or if they wish to, they can re-domicile the existing investment funds overseas by transferring the registration to Singapore. Another good thing and another difference between VCCs and regular companies is that whilst both types of structures do need to maintain a register of shareholders, the register of shareholders for a normal company is public and can be purchased from ACRA. However, the VCC register of shareholders is private, so this does not need to be made public unless it is requested from the authorities. But in that instance, it's still private anyway. So I hope so far that everyone has had a better understanding of the different types of business structures in Singapore. So next, what I'd like to go into is why is Singapore the ideal place to set up your business? So Singapore is widely known as the business epicenter in the heart of Asia. It's the world's busiest port and a top location for investments in the Asia Pacific region. So factors such as a good location, competitive workforce, pro-business environment, and forward-looking economic policies have led Singapore to become the world's gateway to Asia. Previously, before COVID and for a little bit before then, I'm sure everyone knows that global businesses used to choose between Hong Kong and Singapore for their headquarters or to set up their regional HQ in Asia. However, the uncertainty of Hong Kong's political and economic situation has driven larger institutions and investors to pivot to Singapore instead. In addition, Singapore has a great mix of Eastern and Western influences, with English being the main business language, making it easy and convenient for business owners, clients, and investors to communicate. There is also ease in registering a company in Singapore, with the process taking as quick as a few hours. So of course, before the registration process, there would be additional compliance requirements to meet. However, compared to other jurisdictions where it could take months for a company to be registered, the Singapore registration system is extremely straightforward. And as mentioned earlier, Singapore does have a low corporate income tax rate at 17%. So this makes it extremely attractive for businesses. It also has a robust legal system with strong anti-corruption laws and intellectual property laws, making it a jurisdiction preferred by business owners and investors to conduct business. So next, if you want to set up a company in Singapore, what do you need to consider? So a few things that you might want to consider is how much capital are you prepared to invest, and how many owners will there be? What liabilities and responsibilities are you prepared to assume? And what kind of risks are you prepared to take for your company? So in addition, we have included a mini checklist for the items that you'll need to set up in Singapore. So some of the items that you need is, of course, a company name, the minimum of 1 and maximum of 2 business activity code. All Singapore companies will need a Singapore registered corporate address as well. You'll need to let us know who your directors are going to be, including the local resident director, who your shareholders are going to be, and in connection with that, what is your share capital, as well as the number of shares that you want to set up your company with. So after you have thought about this checklist, then the next would be things that you don't need to think about at the point of registration, but information that you need to know with regards to statutory deadlines in Singapore. So new companies in Singapore can have up to 18 months for their first financial year end. So that means that your company's financial year end does not need to follow the calendar year. It could be any time within the rest of the year as well. And after the first year, the financial year will be on a 12-month rolling period. So with regards to the financial year and in connection with that, there are a few statutory requirements that all Singapore companies will need to fulfill. So as you can see here, there are two government bodies. One is ACRA and one is IRAS. So ACRA is the Accounting and Corporate Regulatory Authority. So this is the authority which governs companies. And with ACRA, and within 6 months after the company's financial year end, it will need to hold its annual general meeting. And within 7 months, it will need to prepare and file its annual return. So prior to holding its annual general meeting, the company will need to prepare its financial statements as per the Singapore Financial Reporting Standards. Then the next regulatory body, and probably one that everyone is familiar with because every country has its own, and that's IRAS, which is the tax authority. So with IRAS, company have 1 to 2 statutory filing requirements. So why is it 1 to 2? So first, it is the estimated chargeable income, also known as ECI. So this is due 3 months after the company's financial year end. However, in certain conditions, this filing could be waived. The next one would be the corporate income tax filing. So this is due the end of November, the year after the financial year end. So just to give everyone a little bit of context, if your company's financial year end was the 31st of August, 2022, your corporate income tax filing would only be due on 30th of November, 2023. So whilst ECI could be waived in certain conditions, corporate income tax filing is mandatory. So next, I'd like to go into what Lantern has to offer. So as Annabelle introduced at the start, Lantern is a corporate service firm. So we offer a full suite of services from incorporation, acting as your company secretary. We can also offer the service of giving your company a local registered address in Singapore, as well as a local resident director. And we also do accounting, tax, and payroll services. So these are generally all the services that a company will need to set up and run successfully. In addition, Lantern can also help companies open a bank account with a brick and mortar bank in Singapore, as well as provide assistance in work passes for employees and long-term passes for the dependents of these employees. But of course, and the approval for the bank as well as these work passes is subject to the decision of the bank and of the Ministry of Manpower. If you don't need a traditional banking solution, we can also introduce you to non-traditional banking solutions as well. So why is Lantern a good choice for your company then? So our team has worked with a range of businesses, from those in the startup space to single business owners to small, medium enterprises. So with this experience that we have the capabilities and expertise to guide your business to ensure that it keeps good corporate governance. In addition, we understand that every company is different, and therefore at Lantern, we don't offer a one-size-fits-all solution. Instead, what we have is a pay-as-you-need model, so our clients take on services that suits them and their company's needs. This usually means that clients start off with just a small suite of services, and as their business scales and grows, then they will take up more services with Lantern or upgrade their packages as necessary. We also pride ourselves especially in our one business day response time and team members who are always happy to ensure that our clients' needs are met. Lantern also utilizes technology to give a seamless experience to our clients. Corporate documents are stored on our platform called Zave, which our clients can access easily. So this cuts down request times when you need your company's business profile or your company's constitution. Our registered address service is also on the platform. So that means when we get your letters, we will upload them onto the platform so you can access your letters anytime without waiting for someone to email you. So while starting a business in Singapore can be daunting, we believe that at Lantern, we're able to help you along the way and ensure that your corporate governance requirements are met so that as business owners, you can focus on growing your business and scaling up. So that's it from our end for starting a business in Singapore. And is there any questions on the floor?
Thanks, Chantel. Thanks for your sharing. I hope our attendees got some useful information from this webinar. Okay, I can see questions coming through. Let me just read through them. So the first one, what can I use my company's paid up capital for?
So this is quite a common question that we get, especially with companies who are required to have a higher paid up capital, be it for reasons and to secure a rental lease or to get a work pass for their employees. And so some of our clients have previously asked us as well, can I just deposit the money in the bank and then take it out once and this condition is fulfilled? And so unfortunately not, because the paid up capital is supposed to be an investment into the company. However, what you can use the paid up capital for is things like an operational cost. So paying your service provider, paying rent, paying salaries, paying bills. So even if your paid up capital is quite a high amount, that amount doesn't have to be in the bank account all the time. You are allowed to use it to pay for these costs as the company functions and operates. So any more questions?
Great. Yep, I can see another question. I heard that companies have to file their financial statements in XBRL format. What is this?
Okay, so maybe just to clarify first, not all companies have to file their financial statements in XBRL format. So XBRL is actually an abbreviation for Extensible Business Reporting Language. So this is a language that is like electronic communication between businesses and financial data checkpoints worldwide. So only certain companies will need to file their financial statements in this format. And this is done when the company files its annual return with ACRA. So which companies need to do this? And these are mainly companies with 20 or more individual shareholders, or companies who have at least one corporate shareholder as well. And so aside from that, companies who are owned by 20 or less individual shareholders, they don't need to file their financial statements in XBRL format unless the company is insolvent. But as long as the company is insolvent, it doesn't need to. So if your company does have this XBRL filing requirement, Lantern, when it's needed, is able to assist your company with the conversion of your standard Word or PDF financial statements to XBRL format as well.
Thanks, that's good to know. Okay, I think that's all the questions. But if there are any questions that pop into your mind later on, feel free to email us at hello@lantern.com or send us a message on social media. One of our team members will be more than happy to help you out. There will be a quick survey after this webinar. Please help us fill that out to let us know what you think about this event. And thank you again for joining us today. I hope to see you at our next event. Have a great day.
Thank you, everyone. Bye-bye.